Good morning, traders, and welcome to the Daily Call today, Thursday, the 1st of August. Before we get started, as always, please understand that any advice in today's session is of a general nature only and that your personal circumstances have not been taken into consideration. Okay, let's have a look at what's happened in yesterday's markets. We had a data come out locally. It was CPI quarterly numbers, and that came in at 0.6%. That was pretty much on the forecast, while the trim mean CPI was on forecast at 0.4%. Dollar reacted slightly at this news, jumping up around about 20-25 pips at the time of the announcement. Our local Aussie dollar did lose ground against the US dollar, but that was from news that came out later in the evening. As I'm showing you here, where from the US we saw the non-farm employment change pretty much on forecast. This is the private sector. That was 156,000 jobs. But the biggest news was that the Fed did cut interest rates. Yesterday they cut them by 25 basis points. It's the first time they've made a cut since 2008. But the big question was, since they cut rates, why did the US dollar rally when normally rate cuts are negative, impacting on a currency? Well, it seems that investors took note to Fed Chair Powell's comments that this cut doesn't necessarily mean it's a long series of further cuts to come. And also he focused on the strength of the labor markets and the resilience of the economy. The end result was US dollar did rally, and our Aussie dollar, along with all the other major currencies, lost ground against the US dollar yesterday. The only other data came out from Canada. It was the GDP numbers, and that was a little bit stronger than the forecast, coming in at 0.2%. Alright, let us move to our chart of the day. Incidentally, yesterday's chart of the day, we tried to trade a sequence of 8 consecutive candles, should I say, on the Aussie dollar. I got stopped out on that trade. I did get an email from a couple of you that actually did hit your number. It was touch and go depending on at what point you entered that trade. So it's a mixed result, but for me, I've taken it as a stopped out trade. So now let me move on to today's chart of the day. It is the Aussie US dollar again, and look, there's a couple of, if normally when I trade that statistical method, I don't go into it again. Okay, but if I did not see yesterday and I saw it today for the first time, today we have 1, 2, 3, 4, 5, 6, 7, 8, 9 consecutive days. So I guess if you didn't trade it yesterday, today it's even statistically better in your favor. But regardless of that reason, the reason I'm showing you this chart this morning is because it looks like there's a nice double bottom forming here. So we'll go back to our bread and butter type trades and we'll look for price action to confirm at the base here. If we get that confirmation, and then we can get the setup, and basically that will be a trigger for us. So this morning's chart of the day is the Aussie US dollar double bottom, and we're looking for price action to confirm before we execute on this one. What's happening for the session, which is about to kick off? It's a big session, big night for the pound. The pound has been falling significantly, and tonight at 9 o'clock Sydney time, we have the inflation report, the official bank vote, the monetary policy statement, and the rates decision. So this is huge for the pound. Look out for that. Make sure you don't get caught up in it if you don't want to be caught up. Half an hour later, Governor Carney will come out and give his speech, summarise what's basically happened half an hour earlier. And then the last bit of data for the session happens at midnight from the US. It's the ISM manufacturing PMI numbers. Guys, as always, please feel free to contact us if you do have any questions. Follow me on Twitter at ChatFX for trade setups and breaking news. Most importantly, hope you all have a fantastic trading day. I'll talk to you tomorrow for the Daily Call. Bye for now.